journal entries. But before going for journal entries, I need to know some answers from you. I need to know some reply from you, response from you. Now, here we go. This we enter journal entries in the voucher accounting vouchers. Now, in the case of invoicing under bill to ship to, bill to ship to, bill to state, ship to state. Okay, when you're issuing a bill, sorry, tax invoice, I'm saying it is not a bill, it is a tax invoice. Now, the supply status Maharashtra. Maharashtra is supplying the product or services. Is billing to Maharashtra. Is billing the details to Maharashtra. And shipping the products to Tamil Nadu. So supply state and bill to state are same. Supply state and bill to state are same. Both are same. But ship to state is different. Ship to state is different. Okay. Now my question is to you, which GST taxes you have to pay? Whether it is CGST plus SGST, state central tax plus state tax, or IGST. Which you will pay? IGST means integrated goods and service tax. SGST means state goods and service tax, state tax, or we can say UTGST. If you belong to Union Territory, UTGST, Union Territory Goods and Services Tax. Which will you pay if this is the case? The question is, which tax you have to pay? Either you have to pay CGST plus SGST or UTGST or only IGST. If this is the case, supply state
Uh,
and billing state is same, shipping state is different. I need response from you. I need response from you.
GST plus SGST, sir.
Which taxes you will pay?
e-way bill,
Yes. Which taxes you will pay?
e-way bill,
No response from your side.
sir, e-way bill,
Pardon?
e-way bill, sir,
I'm not able to hear properly.
e-way bill, sir.
I'm not able to hear properly. Yeah. Now I can hear it. Now. Yeah, please. There is a screen that I missed it. Now this is a screen. Somebody has asked in chat, answered chat box. It is not a e-way bill. I'm asking it. I'm asking if supply state and billing state is same, if shipping state is different, ship to state is different. Okay, there are two types of taxes you have to pay. GST taxes, CGST,
Sir,
Plus,
IGST, sir, because it is interstate.
CGST plus SGST or IGST. I received one response. He said IGST. Now again, remember, supply state and billing state is same. Shipping state is different. Supply state and billing state is same. Shipping state is different. So somebody has said IGST. Why? Why IGST? Why IGST? Why not say GST and SGST? Reason for that. Why IGST? Why not say GST and SGST? Why not say GST and SGST?
Because it is interstate, no, sir. So supply and release in one state and ship to is in another state. That's why IGST I told.
So let us check it out. What is the correct one? The correct one, check it out. Now this is a state, okay? This is an India map here. Now we have the Maharashtra.
Oh, Andhra Pradesh, Karnataka.
Maharashtra is where? Where is Maharashtra? Where is Maharashtra?
Yellow, sir, right side to Arabian Sea.
Okay, this one Maharashtra. Okay. Okay, this is the Maharashtra. Now, supply state and billing state is same. Supply state and billing state is same. S means supply. Supply and billing is same. Now, shipping is Tamil Nadu. This is a Tamil Nadu. T and Tamil Nadu. Shipping state is different. Shipping state is different. Shipping state is different. Okay. Now, what we need, what is important is supply and billing is important, not the shipping. Supply and billing is important, not the shipping state. Okay. We are not concerned with the shipping state, where you are shipping the products. What we are more concerned is which is a supply location and which is a billing location. Okay, the supply location and billing location are same. The supply location and billing location are same. In that case, you have to pay CGST and SGST. We are not concerned with the shipping location, shipping state. We are concerned about the supply and billing. Okay, so you have to pay CGST and SGST. A supply and billing state is of same location, CGST and SGST. Forget about the shipping part. If supply and billing are of different location, then we have to pay IGST, Integrated Goods and Services Tax. Please remember these points. This is the practical. Okay. So this is, in this case, where supply and billing state are from same state, you have to pay CGST and SGST. Shipping state is irrelevant. Okay. If the supply state is Maharashtra, if billing state is Tamil Nadu, let us say. Let us take the example. If the supply state is Maharashtra and the billing state is Tamil Nadu, instead of Maharashtra, we said Tamil Nadu. Okay. And let us say instead of Tamil Nadu, shipping state is Delhi. Okay. Now in this case, you have to pay IGST because supply state and billing state are not the same. There are two different states. So you have to pay IGST. So we are not concerned with the billing state. But in this case, supply and billing state of the same origin, same state. So you have to pay if this is same state. If this is the both are same state, supply and billing, then you have to pay CGST plus SGST. That means central tax and state tax you have to pay. That please keep in mind. Even after completion of your BCom course, that is very important. Okay, you are not concerned with the shipping state. Okay, so similarly, we can take n number of examples here. Okay, now CGST, you know, Central Goods and Services Tax, but CGST Act 2017 is passed by the Parliament of India, and the central tax is collected by the central government. Okay, the central tax means Central Goods and Service Tax, CGST. Now, SGST, State Goods and Services Tax, this Act 2017 was passed in the Legislative Assembly of respective states. This Act was passed not in the Parliament, in the Legislative Assembly of respective states, concerned states. That is nothing but State Goods and Service Tax, is not state tax. And this amount is collected by different respective state governments, not by the central government. Okay, so if GST tax is 28%, central tax and state tax have to share equally, 14 plus 14. If GST tax is 12%, 6 plus 6 they have to share equally. Okay, whereas state goods service tax is passed in the Legislative Assembly of respective states, whereas central tax is passed in the Parliament of India, and this act was passed in 2017, whereas GST was implemented on 1st July 2017, if I am correct. Okay, now already we covered this point. Input tax credit. What is input tax credit? When you are buying any product for business purpose, you have to pay input tax. The input tax, it may be under CGST, NSGST, or IGST. And this input tax credit, that means it belongs to you. It can be utilized for payment of output tax. When you are selling any goods to customer or supplier, you have to pay output tax. It may be CGST plus SGST or IGST. Now, if you're having an input tax credit of GST account, sorry, CGST account, and first you need to pay CGST. Similarly, if it is SGST account, first you need to pay the liability of SGST. In the same case, if you're having the balance of IGST account, first you have to pay IGST tax liability. Okay. Now, in case of CGST, after paying CGST tax liability, if anything is remaining, you have to pay for IGST. Okay. And the last part, that CGST credit, input tax credit, cannot be used for payment of state tax. That CGST input tax credit cannot be used for payment of SGST. Not allowed. Now cover second, SGST. First you have to pay state tax liability. Then anything is remaining, you have to pay integrated goods and services tax liability. Okay. And the whatever the input tax credit of SGST cannot be utilized for payment of tax liability of CGST or central tax. Now, third, IGST. Any credit in the IGST account, first you need to pay for IGST liability, tax liability. And anything is remaining, you have to pay for CGST. Still amount is left, some amount is left, you have to pay for SGST. This is how you have to distribute the input tax credit according to this order. Okay, and you remember that whenever you are having a balance account of CGST, central tax, that cannot be utilized for payment of state tax. And whatever the balance you are having in the account of state tax, that cannot be utilized for making payment of central tax. Okay, state, central to state and state to central is not allowed. Central to state and state to central is not allowed. Other than this, you have to follow this order here. Okay, so this you will get a problem. If I am wrong, you will get a problem in the examination in part B essay type question. They are likely to ask calculate net tax liability. We are done in the class. We are done 2-3 problems in the class. If you need to do more, I'll help you to do more in the next session, next tomorrow class. Okay, now again, and recollecting, taking revision again. Now, see, GST is of two types basically. One is within the same state. We again subcategory 2 category, sir. Sale within the same state. If you're selling or buying within the same state, you have to pay central tax CGST and state tax SGST. Combine both. You have to pay central tax plus state tax. And if you are making interstate sale, one state to other state, or one country to other country, either sale or purchase, or you are selling your products to SEZ unit, Special Economic Zone Unit, you have to pay IGST, Integrated Goods and Services Tax. Not only sale, it includes purchase also. Okay, the interstate sale includes not only one state to other state, it also includes one country to other country. Within the same state, you're selling to SEZ unit, you have to pay IGST, Integrated Goods and Service Tax. Again, I covered last class, when you're making exports, there are different types of exports. One, exports which are exempted. Second one, exports which are coming under LUT or bond. And the third, exports which are taxable. The exports which are exempted, you need not pay IGST taxes. So don't pay any IGST taxes. Exports which are coming under LUT or bond, again, you have to give a letter to the government stating that you don't want to make payment of any taxes. In that case also, you need not pay any taxes, but you have to give a letter of undertaking. You have to furnish a bond to the central government. The third exports is which are taxable, where you have to pay tax to the government. The tax is called IGST. Similarly, imports. Imports 95% are taxable, except some rare cases it is exempted. Like in case of COVID-19, oxygen cylinders or oxygen concentrators or medicines, tablets, it is exempted only during the pandemic period. Okay. Second, revising again once again. Next. Again. Please read this. What is relevant? Supply state and bill to state are only relevant. If both states are same, you have to pay CGST and SGST. If it is not, you have to pay IGST. Okay, supply state and bill to state are only considered. not the ship to state. If both states are same, supply state and bill to state are same, you have to pay central and state tax. If both states are different, you have to pay IGST, integrated taxes. Okay, we are not concerned with the ship to state. So ships to state, we don't take ship to state. So this is very important. So make a point on this very important point. Okay. Whenever a person asking question in interview or somewhere you go to any organizations, they'll ask you these questions. Okay. Now we have to prepare ledger accounts here. So many ledger accounts to prepare. Practically, we have these different types of ledger accounts here. These are called current assets. They are called current assets or duties and liabilities. Now, first ledger account you need to prepare is input CGST. Input tax means when you're buying any product for business purpose, you have to pay the tax. That is called input tax. Okay. Another second one is input SGST. You have to create ledger input state tax. First is input central tax. Third is input integrated goods and service tax. Then this fourth one, from the fourth one to the this here. See, from here to here, the GST portal will itself calculate. They create ledgers by GST portal itself. What is this ledger? All this ledger are created by the GST portal only. You need not create independently. All they are created by the portal website only, independently. It will create by themselves. What is electronic credit CGST ledger? Then electronic credit SGST, IGST. Then electronic cash CGST, SGST, IGST. These ledgers are created by GST portal only, not by you. We have to create input IGST by you, input SGST, input IGST. These three you have to create. Then last one you have to create cash or bank account. Except these four, 3 and this one, 4, others are created by the GST website itself. We need not create anything. What is electronic credit ledger? Explain. What is electronic cash ledger? Explain clearly. You may get a question, what is electronic credit ledger? What is electronic cash ledger? What is electronic liability ledger? All these I explain. Now these are called the current assets or duties and liabilities. Now you have to prepare current liabilities, that is nothing but duty and taxes. Now you have to prepare output duties and taxes ledger. First you have to prepare output CGST central tax, you have to prepare output SGST state tax, and you have to prepare output IGST integrated tax. Output means when selling the products or services, you have to pay output tax to the government. You have to collect for the customer or supplier, you have to pay tax to the government. So these are the ledgers to create in the Tally software. These are called current liabilities because you have to pay to the others, you have to pay to the government. Okay, this is the output taxes or duties and taxes. Next, these are the current liability ledger. You need not create, the GST portal will itself create. The first ledger created by the GST portal is electronic liability ledger. That's CGST, SGST, and IGST. Liability means where you have to pay to the government. So liability indicates meaning of liability means you are responsible, you are liable to pay. Okay, in the future or in the next month or in the coming days. These ledgers are created by the GST portal only, not by you. Okay. Next, now you have to create a party account ledger, sundry creditor. When you buy from a party, when you buy from other person, that person is called sundry creditor. He may be registered, he may be registered, or he may be unregistered, or he may be composition dealer. Okay, if he's registered, you have to indicate he's a registered dealer. If you don't have any registration number, he is called unregistered person. And if it's a composition dealer, you have to select composition dealer. So you have to create party name, that, and you have to select party name belongs to which category. Does it belong to registered, unregistered, or composition dealers? Then you have to create sales account, sales ledger, nothing but outward supply ledger. First, you have to create local B2B sales account. Okay, business to business sales account, you have to create a ledger. If you're selling to supplier, you have to selling to the trader, you have to create local B2B sales account. Suppose you're selling to customer locally, you have to create local B2C. B2C means business to customer sales account. Suppose you're selling to other states, to the trader or to supplier, you have to create interstate B2B sales account. Or to selling to the customer of other states, you have to create interstate B2C business to customer sales account. Suppose you are selling goods to other countries, you have to create export sales ledger account. Suppose you're selling exempted goods or exempt services, you have to create exempt sales, whether it is B2B or B2C, or if it is local or interstate. Then you have to create RCM sales, reverse charge mechanism sales. Okay, what is reverse charge mechanism? I already explained in the virtual class here. It may be a B2B or B2C, local or interstate. Then you have to create e-commerce sales. E-commerce sales, if it is B2B or B2C or local or interstate. These are different types of sales ledgers you have to create if it is there. If it is not there, don't create here. If it is there, you have to create here. Okay. So this is the first two is within the same state. We are selling within the same state. The third and fourth is from one state to other state. The fifth one is you are selling to other country. Okay. The sixth one, both within the state or one state to other state. That's called exempt sales, not to other country. We don't have other countries. Okay. It may be a to the B2B or B2C, business to business or business to customer. The RCM, reverse charge mechanism sales. Okay. So this is, it may be within the state or one state to other state or one country to other country. Okay. Suppose you are importing any products, you have to pay tax. The receiver of the goods have to pay tax. That tax is reverse charge mechanism. RCM tax is to pay. You have to pay IGST tax. IGST is based on reverse charge mechanism. It may be a local, interstate, or from one country to other country. E-commerce sales here. It may be a local, interstate, or even one country to other country. If it be okay, so it is possible that we will buy the products of e-commerce company of other countries also. Okay, so these are the very important things you have to remember, you have to keep in mind. It's very important points here. Now, purchases. You have to create again purchase ledger. The different type purchases are there. One is purchase account. Next one is exempt purchases. So suppose you are buying goods that are exempted from the tax or services that is exempted from the tax. Now expense account. Then same invert supply with purchase account. These are the ledgers you have to create under purchase category, purchase accounts category, or it is also called inward supply. Sales means outward supply. Now entries you have to pass in the vouchers. Okay, different vouchers are there. Suppose if it is local sales, business to business sales, you have to pass the journal entry. If GST rate is 18%, B2B sales. Okay. Now, first is you have to enter debit column debtors account or party name account. You will enter party name account here. Okay. Enter the party name account. Credit column, you enter sales account, local B2B sales, and you have to pay tax also. If it is within the same state, GST rate is 18%. You have to enter, pass the entry to 9%. You have to mention the percentage also. 9% output C. Let's call output CGST. In selling the goods, output CGST and output SGST. 9%, 9%. Okay. Debtor account to local B2B sales account to 9% output CGST account, again to 9% output SGST account. This entry is you have to pass if it is local B2B sales and the GST rate is 18%. Okay. If it is 12%, here it becomes 6 and 6. 6% output CGST and 6% output SGST. This is a journal entry you have to pass in the voucher. In the voucher. In the which voucher it is actually to pass. Now, for a regular dealer, you have to maintain books of accounts. Not only in that Tally software, you have to maintain books of accounts either in electronically or manually. In that books of accounts, you have to maintain purchase book, you have to maintain sales book, and this entry you have to enter the sales book. In the sales book, you should clearly mention all these entries there. Not in the Tally software. Tally software is only to filing the return. And manually or electronically, you have to enter these entries in the sales book. Okay, you have to enter the sales book, you have to enter the purchase book, you have to enter the production product account, different products, you're selling any products, manufacturing any products here. So again, maintain expenditure account, expense account ledger. So this has to enter in the sales book. So I'll stop here, I'll take the attendance.